Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic systems expert John Sneisen, and we're joined by Mark O'Byrne over Skype right now, and he is the executive and research director of GoldCore.com. You may see him on Reuters, CNBC, Russia Today, Bloomberg, and with 4,000 clients in over 40 countries and $110 million in bullion assets. GoldCore is known to be safe and hold many unique characteristics in that line of work. So welcome, Mark.
Thanks a lot, Josh, and thanks, John. Thanks for having me on.
Absolutely. Now, can you tell us more about GoldCore.com before we get into the greater details?
Yeah, basically, we were founded in 2003. I was a young guy at the time, a bit like you guys, and I suppose I was a bit worried about what was happening in the world. September 11th had happened, and I sort of had a view that that was a sort of a game changer in terms of what was happening in the world. Also, the Nasdaq bubble had burst. And I was looking to put some money into something safe, into an investment. I started buying gold myself personally in 2001, 2002. And I couldn't believe just the lack of knowledge, the lack of information that there was about gold. And even on the web back then, there wasn't that much information about gold. And when I spoke to people internationally about investing gold, they all laughed at me and said I was a bit crazy. And why would you be buying that barbaric relic, you know? And that was red rag to a bull. The more they discouraged me, the more I realized this, from a contrarian perspective, this is a great opportunity because everybody is so negative on it, you know. So basically, I started buying personally, and then realized, wow, there's actually an opportunity there to set up a company, because no one in Ireland was doing it at the time, and even in the UK, no one was sort of positioning gold vis-a-vis other investments. It was very much sort of mom and pop coin shop selling a few sort of Krugerrands and sovereigns. There wasn't any sort of sophistication in terms of the advice and allowing people to buy gold and take delivery in large amounts, and also to store. So that's how the business came about, and yeah, we've been working hard at it since 2003, and yeah, it's been, you know, ups and downs, but pretty strong growth over the years, and yeah, we're expanding internationally as we speak. The US and the Canada are big markets that we're looking at right now. Soon to launch an affiliate program actually that we're quite excited about.
Yeah, and it's quite phenomenal, the rise in gold between 2002 and around 2012. A lot of people, in 2001 were selling off their gold and saying, "Oh, I've given up on this. It's not going anywhere," because it had been maybe 20 years since the last major jump.
Yeah,
So a lot of
exactly.
people were just selling it off, and then from between 2002 and 2012, it almost went up 10 times. It's just unbelievable. So. You mentioned that you started mostly in 2003 with buying up a whole bunch of gold, which is like a beautiful time to start that up. So I wanted to get to this, which is gold has been for thousands of years a safe bet along with silver in most cases. The preservation of value is quite incredible.
Hmm.
Why is gold such a immortal investment?
I suppose the primary reason is that it is very, very rare. It's finite, it's tangible. The rarity is something that most people don't understand, and most people, many of them, don't actually believe when you tell them it. Indeed, I was quite surprised, and I had to, find other sources, because when I read it first, I said that can't be true. So all the gold in the world that's ever been mined, so above ground gold, we're talking about 170,000, 175,000 metric tons. People go, oh, well, that sounds like a lot. A metric ton sounds like a big weight, but gold is a very heavy, heavy metal. So if you have 1 metric ton on your desk, it would pretty much fit on your desk. I mean, it's roughly, I'm trying to get it on the video for, but it's
Yeah.
roughly probably a meter and a half by a foot type of thing. So
Yes.
it would fit basically, it's two Olympic-sized swimming pools. It would fit on the center court of Wimbledon. It's 21 meters cubed. So that's very, very rare. And when you compare that with the amount of money that's been printed on a daily basis today, I mean, there's great infographics when you put your $100 bills and stack them high in terms of the printing of dollars today vis-a-vis the amount of gold that's mined on a monthly basis. I mean, gold, it's infinitesimal. So that, I mean, I think that is the primary reason. I mean, it's interesting, the tangible nature of it. there is, I think, the first gold coin hoard that was, the oldest gold coin hoard was found in 1909. The British Museum found this Greek gold coin hoard in Ephesus. They found it in this temple in Ephesus, and it was basically a little jar that had about 19 gold and silver coins, electrum coins there, which is sort of a blend of gold and silver. And they went back to the 6th century BC. So it's exactly what you said. 2,600 years, these coins, and they've retained a value throughout history, and they still had a value in terms of their melt value, would have still been quite high in terms of gold and silver. But obviously, these coins are priceless because they are now, they're antiquities, and they're now in. I think they're probably still in the British Museum. I'm not sure whether the Greeks have got them back at this stage. Probably not.
Yeah, well, and of course, going back to 1024 AD, China was printing money on paper, and of course, we've seen almost every paper currency collapse over history. And going back to the Byzantine Empire, gold was such an incredible part of keeping that society up, and being able to have such prosperity over, I believe, 1,200 years under gold. And I wanted to ask because, we've practically every renowned economist we've spoken to recently have said that there's a certain collapse coming soon. In Canada, the United States, the euro, of course, we see potentially hyperinflation in Venezuela. Where do you think we're headed in the next few years? And why should people look at gold instead of looking at, worthless paper currency?
Where are we headed? We've been fairly consistent with this. We think we've had a brief recovery, but the recovery is completely unsustainable based as it is on 0% interest rates and currency debasement, So we believe we're headed to a recession. We're headed to probably a recession in this year, I would think. And I would think then in 2017, 2018, I think we will have a very severe recession and probably a depression. So the question then is, to us, is more, how severe will it be, and what will the nature of it be in terms of this ongoing debate? Is it deflation? Is it stagflation? Is it hyperinflation? And I think we don't know, because there's so many variables, and there's a lot of politics comes into this, and there's great games are afoot, and there's a lot of sort of big beasts in the room, whether it be the US, the EU, China, a lot of different players there. So, and the politics can actually influence what happens in terms of whether it's deflation, and also the central banks obviously can influence it. So, but I think our big picture view is roughly deflation in the short term, and we're beginning to see that in stock markets, deflation in assets that have a lot of debt attached to them, and then we think that will quickly morph into inflation, particularly inflation of necessities, so food, water, and finite tangible commodities. So that's sort of our big picture view, but it's going to be different in different countries. But I think roughly, in the larger developing nations that have a lot of debt and have corrupt central banks, with Goldman Sachs and JP Morgan basically running the show, in all the major industrialized economies, I think that's pretty much, that's a very simplistic sort of overview, but I think that's roughly the view, our view of how we see things panning out.
Yeah, and many people mention the difference between money and currency. The two are separate, I believe, because of course currency can be literally just based on absolutely nothing but the confidence. And when it comes to things like gold and silver, we've got this preserved value that always kicks back eventually. There's downtimes, of course, but it always kicks back. Now, I wanted to ask you about where are the biggest risks of bail-in today's world economy? Because we're starting to hear this new concept of a bail-in. It is more of a new concept. A lot of economists don't know what to think about it, because it's kind of the first time it's really been coming up as much as it is in the last 2 years. So what do you think about bail-ins?
Oh, well, I just think they're crazy. It's and the narrative is, the central banks are saying the reason we're bringing in bail-ins is to prevent deflation and to stimulate growth. But it's quite the opposite would happen if you actually confiscate deposits and confiscate money from people. You're actually taking money from the savers. You're taking money from stored capital, stored labor, and that's money that will be used for further consumption, for further investment assets, for companies to hire people and to expand. So if you go and confiscate their deposits, and that's what is planned in the bail-in legislation throughout the world. In all the leading industrial nations have signed up to it: the US, Canada, European nations, the UK, Japan. So, if you do that, you're taking capital. My biggest concern is actually what we call SMEs, so small and medium enterprises, because they are the backbone of many of our economies, And if you start taking their capital, basically what they're saying is we will take money above the deposit guarantee, which is roughly $100,000, €100,000, £100,000 in different countries, But that is just an arbitrary round figure. That's just a one with 5 digits average. I would think that would very quickly change to maybe 50,000 or 60,000. I think they'll arbitrarily reduce the guarantee size because they know, and this has happened in Ireland, and I know it's happened in the UK with clients, they're actually putting in £99,990 in each bank. And that way they're keeping themselves below. They think they're protecting themselves from this eventuality. But the bankers know this and the governments know this. So they know people are trying to game the system this way. So therefore they'll reduce the government guarantee and people have an even bigger haircut in their deposits, So it's just, what it is basically trying to protect the big banks. And the big corporations at the expense of smaller banks and smaller companies and medium enterprises and the savers, basically, And it's absolutely crazy, and we've done a lot of research on it because we think it's one of the biggest risks in the world today. That it's barely covered, It's almost taboo in a lot of the media, and the economists don't talk about it because they know they're on very shaky ground. It's very difficult to argue the merits of bail-ins. Even amongst the most Keynesian people, I think a lot of people realize that it could become very problematic, and it actually will create systemic risk and possibly runs on banks. It will have the exact opposite effect as what they claim that it will.
Yeah. What I've seen here in Canada, I studied the banks and what they've done here. I see we have different deposit insurance corporations around the world. Here in Canada, we have the CDIC, the US have the FDIC, and so on.
That's right.
What I found out here in Canada, actually, Canada was actually the first one to implement bail-ins into their legislation in 2013. Now, to go forward on that, I looked into the CDIC fund, what was actually there to back up the deposits under 100,000 Canadian dollars. Well, what I found was quite revolutionary because I looked at the numbers and they only have about 0.79% of all deposits under 100,000. Now, a minor little thing happens and, like they help you with insuring their deposits from different things. But when you have a major bank like our Royal Bank of Canada, TD Bank, BMO, and so on here in Canada going bankrupt, you're looking at least 5% of deposits under 100,000. So now we're definitely looking at a bail-in from my point of view here in Canada. And I wanted to see your point of what you think about Canada, because Canada was on forefront of this, and that's where me and Josh live. So I want your input on that.
Yeah, well, as you said, Canada signed up, and I think it came in some bill. It was sort of in the small print of some bill in the Canadian Parliament, so it was crept in there like it was a lot of countries, And I think it was a joint thing, as you said, with the Federal Deposit Insurance Corporation, the FDIC, and it was weird because it was the FDIC and actually the Bank of England, who had a joint. I think they call it a resolution, So yeah, you're right, and it's funny because Canada it's interesting. People see it almost as a safe haven because of the natural resource wealth, and there is a degree of truth to that, because you do have huge natural resource wealth, and I think this commodity bubble that's burst is impacting Canada in a big way. But I think in time, Canada has much stronger fundamentals than the US. You've less debt. and you have natural resources, but at the same time you do have issues because your banks do have a lot of debt. They have got involved in some of the shenanigans, shall we say, of Wall Street, and your politicians. Unfortunately, there is a degree of following what happens in Washington, and I suppose the big question is, will Canada blindly follow the US and the US financial and monetary regimes, or will Canada strike out their own independent path? And I think that's hopefully for your sake, because that's ultimately what we all need to do. We need to take back power from these unaccountable institutions, and Iceland is the one for model. That's it's the beacon of light and hope that that they are the one country that had their massive issues with their banks, and they dealt with it, and they locked up the bankers, and they devalued their currency, but they maintained their monetary independence. And I think that's a lesson in that for all of us.
Yeah, and you mentioned previously Keynesianism, and it seems clear to me that the central planning at the Federal Reserve and the Bank of England, at these central banks, they go against the Keynesian perspective of, even John Maynard Keynes spoke about using gold, just not, just more centrally planned, but they are basing it on like fiat money. And what do you think about, I believe that there seems to be some kind of test with the euro for a more, international currency system, because they've been talking in Canada, the United States, and Mexico as well about creating a North American Union for one centralized currency for the entire continent. I was wondering what your thoughts are on like kind of this talk about creating a world currency, because it just sounds crazy to me.
Yeah, I mean, it is crazy. And I mean, we see in the Eurozone and here in Ireland in particular how crazy it is for a small country to give up its interest rates. Basically, one of the key reasons, not many people know this, one of the key reasons why Ireland had such a terrible financial crisis and massive financial crash was because our housing market collapsed. Our housing market collapsed because we had a massive housing bubble and property bubble. And the reason for that was we had German interest rates. And yet we're an Irish economy, and we're very different to the Germans. The Germans tend to save money and put money aside, and culturally they're quite different than the Irish. And our economy was quite weak, and yet we had these very low interest rates. We should have had higher interest rates for our economy, but we had, as I said, we had near 0% interest rates, 1-2%, which led to massive speculation and a property bubble, a bit like you guys have had in Canada in recent years. I suppose it's happened globally now at this stage, But yes, so one size fits all interest rate for all these different economies, whether it be Spain, Italy, France, Germany, and Holland are doing well. Other countries aren't doing well. It just doesn't make sense. So how you could do it on a global basis, I don't know. I mean, there was a talk of the Amero at one stage, AMERO, which is this combination of US, Canada, and the euro. And there was a guy who went on CNBC who seemed to be quite respected, and he got on CNBC and he talked about this as if this was being planned. It was de facto, but there hasn't been much talk about that. I haven't heard it from officialdom really, and I haven't really heard it in the mainstream media. So I don't know if that idea, is still there, but who knows? I mean, it depends how badly the whole system crashes. If the system crashes very badly, then it could be used as an excuse to bring out some sort of de facto, I don't know if it'd be a world currency, because I'm not sure if the Chinese and the Russians and these other players will go along with it, but it could be a de facto Western currency. But I don't know. I mean, when you see what little Iceland did, I think already in Ireland there's people asking questions and saying maybe we should go back to our currency. Our currency was the Irish punt, P-U-N-T, and I think there's similar movements in Spain and Italy, and so how they could possibly implement that, I don't know, but who knows? They may try it.
I'm gonna interject just one point in there that the United States, Canada, and Mexico have been going to meetings for the last 10 years under Prime Minister Stephen Harper with President Bush, and afterwards with President Obama, and now our new Prime Minister has been meeting over these deals for a North American Union. They haven't released much information on what they're exactly talking about, but they have made it clear that they are working towards North American Union. So just one bit of information that fits that narrative. But yes, there aren't a lot of huge examples of it actually happening as of yet. And hopefully, there will be enough people power to basically say, hey, that's a terrible idea. Don't go down that road. We're already in enough issues with what's going on with the current fiat economy in the United States, Canada, elsewhere.
Yeah, we can't sustain it at a national level. How can we try to sustain it at the international level? Right?
It can't happen. Yeah. So John, you had a question here.
Yeah, Mark, what is your thoughts on owning gold, and what is the best way of owning gold? And I also wanted to know what you think about the recent Comex situation. What is happening there, and if you can explain what the Comex is.
Yeah. So, well, basically, the safest way to own gold is either to take delivery of it, take it into your own possession. If you feel secure enough in your own home, some people don't, but lots of people do, and obviously you need to feel very secure in your own home, and you wouldn't want to bring too much into your own home. But I think if you can, everybody should take delivery of a small amount of gold and or silver, and then if you're going to store it with a third party, you need to be absolutely certain in terms of what's called bailment and the legal rights. So you need to know that you have outright legal ownership of that bullion, and you need to know in the event that the broker or the person that is providing that bullion disappears or goes to the wall, or for whatever reason you cannot contact them, you need to know that you can contact the depository or the vault directly, and you can either take delivery of your gold or you can sell that gold to another broker. So there's a lot of providers. It needs to be allocated and segregated. So that means that your bar is owned individually. You know that the bars you own are in your name and you have serial numbers for them, and you can log on to their website and you can say, right, I own 50 1-ounce gold maple leafs, or I own 50 1-ounce Pertmint bars, and here are the serial numbers. And you should get that both from the person who is selling you the gold, as I said, the broker. So we're a broker in effect, but you should also have a tripartite agreement and visibility, whereby you can actually see with the vault provider that that gold that has been sold to you is actually there and that you own it outright. Otherwise, you have a lot of exposure. The whole point of owning gold is a safe haven asset. You don't want to have that exposure to the third party. And the beauty of owning gold with us, I would say that, wouldn't I? But genuinely believe that this is the way to own gold. If something ever happened to GoldCore, God forbid, I don't think it will. We're planning for all these eventualities, but it wouldn't matter because you have a direct relationship with the vault. And you can sell your 1-ounce gold maple leafs to any one of a number of bullion dealers. Even, if you have gold stored with us in the vault in Zurich or Singapore and Hong Kong, you could get on the phone to bullion dealers in Canada and say, I have this gold in Zurich or Hong Kong or Singapore, I want to sell it now. And they'll make a market for you, and it's liquid. So hopefully it's with us, but if it's not, that's fine. But if you buy from some other providers, sometimes you're completely dependent on their website and on their technology and on their servers and their employees and on their directors and on their integrity. So you have a lot of counterparty risk there in terms of technology, individuals, all the rest. So the way to get rid of that is have a direct relationship with the vault provider. We use Loomis in Zurich and Hong Kong. We use Brinks in Singapore, and that's the way we believe. We believe everybody should own gold that way and take delivery as well. In terms of Comex, basically Comex is the futures exchange, and basically, it's how mining companies, banks, large jewelers, they generally use it for hedging purposes, and that's what the futures market is meant to be about. But like most markets these days, it has morphed into a bit of a casino, and it's used for speculation, both on the long and the short side. But people are concerned that it's more on the short side, and that the futures price, the electronic price, or the paper price, whatever you want to call it, has been used to artificially suppress the actual physical price. And there's a lot of evidence, particularly from GATA, a lot of there's no smoking gun, but there's a lot of circumstantial evidence when you put it all together, including statements from the central bankers themselves, that suggest that prices have been artificially capped and suppressed, and that the physical. But what's interesting now, I think, your question is about the Comex default. There are something crazy, like I don't know the latest figures, but it's around 270 or 280 claims or 280 ounces of Comex claims for every 1 ounce of physical gold in the Comex inventories. So that right there is leverage on an extreme scale. It's a Ponzi, and Ponzi's inevitably fail. So the question is when, and all it will take, and I think we're beginning to see it, all it will take is some of the big money in the world to start saying, I want to take delivery. And when that happens, then the whole charade will be over, and you will see a default. I think that's when we will see, I liken it to a beach ball that's been pushed down under the water in the sea, and they've pushed it down and pushed it down. They've artificially suppressed it, but we all know what happens to the beach ball once it's released. The more you push it lower artificially, the higher it will go, and I think we're going to see that in the gold and particularly in the silver market in the coming weeks and months.
Yeah, you mentioned in the coming weeks and months, and so many experts we've spoken with when it comes to gold and silver are saying that we could see as much of it jumping 10 times, in value over the next while. And to some that might sound crazy, but I mean, it's happened before, and of course it's going to happen when we see our economies are about to basically plummet.
Yeah, and especially what I've been seeing is the suppression of commodities. It costs silver is coming from secondary mines a lot of times, and a lot of these mines have been shutting down. And some people do believe that the shutting down on all these mines can be combined with the demand for physical silver bullion is going to bring that price up quite substantially this year. I don't know how much you know about that, Mark.
I know, absolutely. I mean, silver is a byproduct of base metals. Base metals have collapsed in price, so a lot of these companies are actually mothballing their production. So that means that the supply of silver is going to fall in the coming months and years, And meanwhile, demand is very, very strong, both from industry. Photovoltaic cells is a big source of demand. The solar energy industry, but just it's a tiny, tiny market in terms of above ground refined silver. A huge amount of silver has been used up in industrial applications in the last 100 years, So a lot of the above ground inventories of silver that were there are now gone. So it is, when you compare the amount of above ground refined silver, I mean, there's different estimates, but I think roughly, estimates are roughly about $2 billion worth of above ground silver. I mean, that's absolutely tiny. I mean, the central bankers are printing that, and I'm trying to think. I mean, the Federal Reserve used to be doing 50 billion roughly a month, so that's 2 days worth of quantitative easing type of thing, and the ECB is probably doing around the same amount right now, and the Bank of Japan and all the rest. So it's a tiny market, and yeah, we've long said that we believe silver prices will go to their inflation adjusted high. So silver was at $50 in 1980. That was the nominal high. Silver was at nearly $50 again in 2012. It got to just over $49. But if you adjust for inflation in 1980, a dollar today is not worth what a dollar was in 1980. If you just for inflation, that silver price would be around $150 per ounce. And I believe that silver, so that's exactly, you said 10 times, and we think it will probably go that high. But it's important not to get into the whole price prediction thing. Ultimately, I think, as we alluded before, it's not that gold or silver are going up per se. It's more that the fiat currencies are losing value,
Absolutely.
Yeah, it's a wealth insurance. That's basically what gold and silver has been throughout history, mostly.
And I mean, apart from silver and gold, what other metals are you looking at? Metals you would suggest investing in?
Well, the other precious metals are platinum and palladium, and they have very interesting supply-demand fundamentals, very positive, I mean, platinum has been in a deficit for the last few years, and let the prices keep going down, and people are beginning to scratch their heads about that as well. So our whole, we very much believe in diversification in the overall portfolio, but also within the precious metals element of the portfolio. So if you had an allocation of, say you were saying, right, I'm going to put 30 or 40% of my wealth into precious metals. What we would say is, okay, it very much depends on your age, your risk appetite. There's lots of different factors that come into it. But you could roughly say, right, if you're quite conservative, you could say, right, I'm going to put 20% into gold, 10% into silver, 5% into platinum, 5% into palladium. That way you're nicely diversified within that precious metals component of the portfolio, and you can actually rebalance them as well. If one metal outperforms another, you could say, okay, I've done very well in this. Maybe it's become overvalued short term. Sell some of that, reweight, move some of the precious metal that has outperformed, rebalance into the precious metal that has underperformed. I think that's quite an interesting way to play this, and in a quite conservative way. You're not getting into the whole realms of speculation, and it's also a way to protect people, because I think a lot of people are concerned. They say, right, I get it's going to go up, but we have a lot of people say, well, when am I going to sell? And I don't know. And they're worried about this already. And it's like, well, we'll cross that bridge when we come to it, and we'll be there and we'll be advising you. But, that's 3-5 years out. But a way to protect that is obviously to reweight and to take profits once these precious metals outperform, as we believe they will.
And of course, these days it's good to keep gold as insurance and silver as insurance, just for your money, because let's face it, the next 5 years looks a little bleak when it comes to the world economy, and it's good to be able to have yourself backed up with some kind of safety and some kind of insurance on your wealth, because people don't want a huge economic crash to happen and not have any gold or silver or anything physical, because of course they're going to be the first ones that are in the bread lines if they don't have anything.
I'll just give some quick numbers from Venezuela and what have happened there. If you own gold in Venezuela, well now, let's say you put in 1 million bolivar fuerte, which is the currency there, and you actually bought gold in 2010. I looked at the price; it's jumped 4 times now. So you would have approximately about $4 million worth of gold that you were sitting on. Well, if you kept that in fiat currency and looked at it that way, you would have been losing about 60 to 70% right now in value. So gold just preserves value massively.
Yeah, absolutely. And that's happening around the world. It's happening in Syria. It's happening in lots of different countries. But we tend to just focus on gold almost solely in dollar terms, And gold is doing very well. Russia is another example. Ukraine, Syria, any countries
Canada.
that have major. You've had quite a big move, not quite a big collapse as these other countries, but it's starting to protect people in Canada, and that's exactly it. It's a hedge against currency devaluations, and you mentioned the various empires, but it is history, and all you have to do is read your history and you'll see it, and whether it be the Greek Empire, Roman Empire, you mentioned the Byzantine Empire, then through to the Ottoman Empire, then we went through into Portugal, Spain. Then I think it was Holland, then France, then the British Empire, and today we have the American fiat empire. So, and we all know the way they go. And the question, this is inevitable. Who knows? They can manage to kick the can down the road another 20 years. But there's that great chart. I think it's the reserve currency status does not last forever. There's a wonderful chart that shows.
From JP Morgan, I believe.
Was it JP Morgan originally? I wasn't sure. And I think it's roughly 70 or 80 years is on average. And obviously the Federal Reserve came about in 1913, so it's had a good innings. We're at 103 years.
Yeah. Oh, it's always great within economic instability. I mean, can you imagine how much better off people would have been in the Weimar Republic or in Zimbabwe if they had a lot of gold holdings? I mean, oh man, it would. We're looking at a true insurance against a financial collapse, and I really do suggest to the viewers to look into gold more. Appreciate how throughout history gold has always stayed strong. Of course, there's fluctuation. There is with any kind of commodity, any kind of investment, but it always comes back. And of course, fiat currency always reverts to its natural value of zero eventually. Yeah. So just be aware of this. Look at history and get prepared for the chances of an economic collapse, which is almost 100% when you have money that's printed out of thin air and not based on anything. But I mean, 3% of the money that's created at the Federal Reserve is actually printed on paper. The rest is just digital. Yeah. And I mean, that should frighten anyone that believes in physical value. And
I actually have a question that I want to throw in there, if it's okay. Sure. I want to know, Mark, what you think about the move to cashless society and the impact that would have, because cash has kind of been the only way we could keep banks accountable by doing a run on them if they try to pull some tricks on us. So I was wondering what you think about the move that they want to do with cashless society, and what kind of impacts that could have in the global economy.
Yeah, I agree with you. I mean, that is the way that we can keep banks honest. It's if you're not happy and you're worried, you take your money out of the bank and you put it into another bank, or you put it into a safety deposit box. And that's exactly what's happening. And they're trying to corral us in to make us captive to their banking system, because they realize, a lot of us are realizing, they realize, we're realizing that the system is inherently unstable and not sustainable, and therefore people are taking money out and they're putting money into gold and silver. They are actually, what's happening now is some high net worth people, and we know this firsthand, family offices and high net worth people they are putting money, they're taking bundles of high value Swiss franc notes, euro notes and dollar notes, and they're putting them into vaults, and into safety deposit boxes, because they are that worried, and because of the negative interest rates. I mean, why would you leave your money in the bank if they're going to charge you 1%? And today, JP Morgan came out saying that interest rates could go to -3 or -4%. So this is basically a tax. It's a subsidy to banks. And it's just, the whole thing is it's a corporatocracy, it's a bankocracy. Everything is being done for the sake of protecting banks and their profits at the expense of everybody else. As we said, the SMEs, the companies, individuals, and just the wider economy. And the whole thing is absolutely crazy. It's monetary madness of the highest order. And when we look back at these times, people will say, how did that ever happen? And how? And the narrative is interesting, because they're saying the reason we're doing this is because of criminals and terrorists. And it's like, they give me a break. Criminals and terrorists also use wire transfers, and they use much more electronic money than they use high value cash notes, but they're not saying let's ban electronic money. So and criminals and terrorists, anti-money laundering, in terms of money laundering, one of the biggest ways they launder money is to put it into property markets, whether it be in New York or Miami or London. But no one is saying we're going to ban property transactions and investment in property because some terrorists and criminals are investing in property. So right there, the narrative is blatantly false and untrue, and yet this is what they're trying to do. And again, it feeds into the bail-ins as well. They know that in this era of financial repression, the only way they can protect themselves, ultimately, given they are trying to move to negative interest rates, is to have us captive on the system. So it's their way of, again, protecting themselves at the expense of everybody else. And the sooner people stand up and say, no more, or no más, as the Spanish say, the better, and I'm just amazed that there's not more. There doesn't seem to be any sort of debate, or but it's quite coordinated now. You can see it in op-eds, senior people, and they're pushing for it in a big way, and again, it is going to be very, very deflationary, and the narrative of we're trying to prevent deflation, we're trying to create inflation, we're trying to stimulate growth, we're trying to stimulate demand. Well, that will have the absolute opposite effect, and I think anybody who has any sort of understanding of economics and supply and demand knows that, if they've bothered to give it any thought.
It's talking about corruption, well, especially when it comes to the terrorism and money laundering. I studied some numbers from I forgot who it was. It was Interpol or whoever put these numbers out. But there was about, I think, $3 trillion every year that is laundered through money, and only 1% of that money ever gets recouped or taken or found in the system. So.
Yeah, and I mean, in a society today where we are looking at complete devaluation of our dollar, and this Marxist economic practice of the whole idea of a cashless society, it more than ever, people need to research economics, research the price of money versus currency, and also the idea that, I mean, let's face it, it's easy to control a society that are a bunch of debt slaves, and so we need to acknowledge this and realize that, yes, there are nefarious parts of society, especially when you don't understand the subject matter. It's very easy to be taken advantage of. So, Mark, you're an extremely interesting man, and I really appreciate you coming on and talking with us. How can people find more of the work you do and support what you do?
Well, thanks a lot for having me on, guys. And I had a look at some of your videos, and keep up the good work. You remind me of myself a few years ago starting off, and no, it was good to come on and to talk. So yeah, the website's goldcore.com. We're one of the more widely followed bullion dealers in the world. You can sign up for a market update. We do it every day. We've I think something like 27,000 people now are signed up on the mailing lists, and big following on Twitter and YouTube and Facebook and all the rest of it. And a lot of what we do is actually just trying to educate people about the risks that are out there. So it's there. It's all good stuff. It's free stuff, and just as you said earlier on, just educate yourself. There's so many resources out there, and on the web and all the rest, and it's not that complicated. A lot of it is needlessly complicated by economists, and there's a lot of jargon and all the rest. But once you get into it and you speak in layman's terms, people tend to get it fairly quickly. So just educate yourself and use all the tools that are at our disposal today.
Yeah, and try not to watch too much Paul Krugman, because you're not going to get too far watching that. Yeah. Anyway, thank you very much, Mark. It's a pleasure to talk to you. I suggest all of our viewers, please check out Mark O'Byrne. There's a lot of great stuff on YouTube, actually. Capital Account from Russia Today. Going back years, Max Kaiser. Excellent interviews. And I also thank John Sneisen here for joining us and getting us involved with them.
Yeah, I really think just your blogs. I really love your blogs, Mark. So everybody should follow your blogs. It's a great update that comes out every day. And if it wasn't for your blogs, sometimes I wouldn't be able to share some of the really good content that you put together for everyone.
Thanks a lot, John. Yeah, I appreciate that.
Thank you. And we will see you guys soon. We've got lots more coming to you, so stay tuned. This is Josh Sigurdson signing out from World Alternative Media. Find the truth. Be the change.